Hi, and a very warm welcome to MFB Live. Thank you so much for joining us today. My name's Jenny Brown. Now, in terms of what we've got lined up for you today, we've got a really great and diverse range of people joining us for our panel debate and then for our interviews. So you can expect today, by way of an agenda, first of all, for our lender panel, it's going to be hosted by Steve Alanick, our Managing Director, and he's going to be joined with Emma Cox of Shawbrook Bank and Alex Upton of Hampshire Trust Bank. After that, I'm going to be speaking to Geoff Hall of Berkeley Alexander about landlord insurance. And then I'm going to be talking about the landlord community and repossession regulations with Peter Littlewood of iHowz and Elizabeth Fisher, who is a barrister at 33 Bedford Row. So once again, thank you so much for joining us. I hope you find the coming time very, very useful. And I'm delighted to pass over to Steve, who's going to be talking to Alex and Emma.
So hello and welcome to the third of our MFB Live lender Q&A sessions, where we chat to a couple of specialist lenders to get their take on the current market. Today I'm pleased to say that I'm joined by another two prominent business leaders in the specialist property finance space. My first guest is Emma Cox, Sales Director at the Property Finance Division of Shawbrook Bank. Shawbrook are strong supporters of the property investor, landlord and SME community. Emma is in charge of the national sales team. And with over 20 years experience in the mortgage industry, Emma works very closely with the broker networks, representing their requirements. And I know firsthand she feeds the broker views into the bank, and that forms the bank's strategy. So welcome, Emma. Many thanks for joining us and taking up some of your time today.
Thanks for having me.
My second guest is Alex Upton. Welcome, Alex, and Sales Director at Hampshire Trust Bank. Hampshire Trust are another strong supporter of the property investor market, popular range of sort of long-term and short-term mortgage products, both residential and semi-commercial properties. Alex has over 18 years experience in the industry, having started as a BDM for Abbey for intermediaries, I think it was in 2001. Before her time at Hampshire Trust, had various roles at Castle Trust, including Director of Sales, and Managing Director for Mortgages. So welcome, Alex. Thanks for joining us today.
Thank you very much.
So I thought I'd start with just setting the scene for our viewers. It'd be useful to give our viewers a sort of an idea of the size of operation, market share. So Alex, perhaps you could start by telling us a little bit about Hampshire Trust Bank.
Absolutely. So as you alluded to, Hampshire Trust Bank is, I look after the specialist mortgage division. As a bank, we have over 200 people, have a headcount of over 200 people. That's made up of our savings team and then our three lending divisions, which is our asset finance, which is lending to SMEs, for kit and machinery, etc. We have our development finance division, so obviously lending to property developers, and we have our specialist mortgage division, which is what I'm here to talk to you about today, which specialises in more complex buy-to-lets and bridging finance.
Excellent, thank you. And Emma, there's quite some similarities there with Shawbrook, I guess, although I think different sort of growth patterns. Sort of, where does Shawbrook sit in the market?
So we're very much in the specialist space as well, and I think so. Shawbrook has been in the specialist market since about 2011. That's when we were founded, and we're kind of comprised of three sort of core markets, if you like, served by property division, of which I'm representing the sales director for, business finance, lending to SMEs, and we even have a consumer division that lends to specialist lending loan products. So. And I think sort of our growth over the sort of since 2011 has seen the specialist markets really evolve, and I guess sort of Shawbrook has been able to move with the times, at times, not always as quickly as we would like, of course. But I mean, as it stands to date, since sort of 2011, we've got probably about sort of £5 billion in assets within property alone. We've got 8.8 billion on retail funds, and we have a sort of diverse funding strategy as well. So we have access to sort of TFS funding and also the wholesale markets. And I guess what that kind of lends itself very well to is the fact that we are well capitalised, so that we can continue to grow in these markets, especially in these challenging times. but actually can also present some unique opportunities, which we're well placed to capitalise on, as are others.
And sort of headcount numbers compared to Hampshire, I think you said HTB was what, 200, you said, Annie?
Yeah, just over 200.
Yeah, so I think when we first started, and Steve, you may remember, I think we started about 35 in 2011, of which I was an original cast member, and now we're up to 800 plus. About 90 of which sit within the property division, and then served by about 76 from our central functions, all sort of geared towards supporting property. So, yeah, we've become quite a large organisation, but still small enough, I guess, to remain kind of agile and at times as and when. But yeah, so strong growth, I'd say, since our...
Yeah, I think agile is quite a good word to describe both your lenders, actually, Hampshire Trust and Shawbrook. That's good. And the question I've asked previous lenders who have been on these sessions, certainly during this year, it's clearly been a challenging year. We're sort of 9 months in now of the pandemic. Perhaps you could sort of give us an idea of the sort of challenges you've seen and how that's affected what you do and how you do things. Maybe, Alex, you could kick us off on that one.
Of course. Well, yeah, I mean, if we go back to March, which seems just ages ago now, doesn't it? Obviously, the first challenge was getting everybody home. We had an operating model where we had all, 200 odd staff in Bishopsgate in central London. So, great credit to our IT team, because that kind of went without a glitch and we got everybody into their homes and on their sofas. We kept our new business team fully engaged all throughout lockdown. We thought it was really key. Thought it was key that this was the time when brokers actually really needed us. They needed to be able to get hold of people and kind of help them through the situation. From a business point of view, in March we did contract our appetite. I think at the time that was definitely the right thing to do, while we took stock and could really have a look at the situation and how we could deal with it. But we started expanding it again very quickly, and we're probably back up to practically normal criteria by May, June. Mm-hmm. So which is great. I mean, business volumes, I think we've all seen since July, there is just massive demand out there at the moment, and we are seeing record levels of pipeline business, which I'm sure many people are, but pipeline business, new business and completions. And yeah, I think that's set to continue. The pipeline business definitely, until the stamp duty relief, which I'm sure we'll touch on in a bit more detail. But yeah, so business volumes are fantastic. We've all had to adapt. We've had to change how we do things. We've all kind of now got our Zoom, our Teams, and I think we'll take quite a lot of that into the new world, whatever that's going to look like. I think there's a lot of learning that we can take and actually will improve how we do business and the way we do business going forward. But yeah, all in all, it's been a good crisis, let's say.
Yeah, although I guess the uptick in business is causing some pressure on service levels.
Absolutely. I mean, every lender's obviously, I think if you look at your service levels, if somebody said that, you'd be sort of 7 days, you'd be thinking, what would happen for us to be 7-10 days behind? But, for us, I think communicating where you are, how long things are going to take, that's the key. And that is all about just, being transparent, making sure you're picking up the phone to brokers, telling them when they can expect a decision. And, people are accepting that this is the situation that we're in. And as long as we can continue to communicate, I think it's being managed very well, actually, as an industry. I think we're doing very, very well.
Yeah, I think so. Great. Emma, how's it been for Shawbrook since March?
Very, very similar story, actually. And I think that the key things to draw on for us is that, if we are honest, the service challenges are one that, we sort of are working very hard to resolve. But I mean, I think that's just inevitable. I think it's very difficult to drive the same level of productivity and efficiency. And also the key thing for us was kind of the people aspect, people's well-being. That's been challenging for some as well, that perhaps aren't set up to be working comfortably from bedrooms with laptops and ironing boards, so that will sort of impact. But I think one of the key things that will come out of this is that we probably are all better and stronger and more resilient as a result of it. And to Alex's point, find better ways of working. I mean, having to adapt very quickly to different sort of valuation models, which I know, some of us in our peer group were able to do that with the benefit of AVMs and desktops, etc. And I think the key thing that I took some comfort from Shawbrook and from the wider market was that no one should really celebrate when a lender has to shut their doors. Okay, that's not a good place that the market needs to be in. But the way that lenders did continue to find ways to, even if the door was ajar, and maybe with some kind of restrictions on risk appetite, it was about continuing to support customers and to find better ways to secure a good outcome for them, albeit with all these challenges. And I think because of that alone, those that have been fortunate enough and in a position to be able to trade through this time, those lessons, will never leave you. I mean, you'll continue to sort of build on those, and as are we. And some of those practices will now are part of the, standard practice. So, position of strength. Yeah. Albeit there are still some elements of uncertainty, I think, we're probably better equipped than ever to weather some of those.
Yeah, it certainly appears so. And I always comment on the resilience of our clients, and certainly in that sort of property investor space, they always seem to bounce back and certainly seize on the opportunities. And that's what we're seeing in the uptick of business across all of our businesses, I think. And especially in the sort of more common, maybe short-term refurb inquiries, bridging inquiries, we seem to have had an uptick in. Now, I know both of you are, as well as having the sort of longer-term buy-to-let and specialist finance, you do have a range of bridging products. I remember when I started as a broker back in the day, bridging was a sort of a dirty word. It had quite a bad reputation. What's different about today's bridging and sort of short-term finance offering? Alex?
I think you're right. There was a reputation, or bridging did have this, it was a dirty word and it had a bad reputation, but I think that has been totally dispelled now. Lenders operating in the bridging sector, over the last few years have really upped their game. I think there's a lot more professionalism now in the bridging market. The behaviours of people and the quality of the offering, that's now held to the same standard as every sector in the specialist lending market. So I think we have turned a massive corner when it comes to bridging, and people realise that it's a really useful tool in being able to, build a portfolio, to add real value to properties, to really take advantage of any capital increases, rental increases. So, it's now just it's a tool in a toolkit, and if it's used appropriately, it's fantastic. And we're seeing, like you mentioned, lots of refurbs. Investors are looking for those properties where they can add the value, and they do it time and time again. They get a short-term refurb product. Within 6 months, they've added massive value to the property. They can then exit onto a term product, borrow more capital if they want to do their next project. And it's a tried and it's test works. And we're seeing much more demand for it, because, as we know, bottom lines for investors are under pressure. So for them, it's about where can they really, make their money now, and it's these type of products that enable them to do that. So, I think it's a great product.
Yeah, and Emma, you must have seen an uptick because you've got a great short-term loan offering. I mean, how busy are you guys?
Really, really busy, and I think it kind of lends itself now to the type of borrower that we see in the specialist space. And I think so. All of the good practices now, we saw some, better transparency, everything that Alex has just referred to. But we've also seen the customer profile develop. And I used to, when we first introduced bridging, however many years ago now, probably sort of 2012, 13, I used to come up with the challenge. I used to face the challenge an awful lot of saying, well, you're not really bridging. And I was like, no, it's because we're serving a different customer profile. And I think bridging was associated with customers that sort of needed bridging to dig them out of the hole they were in. And now we're using bridging to help them dig the hole to then sort of, continue to regenerate, build and create value. And I think the investor profile that we see in that space is really, really exciting. That, if you talk about a resilient bunch, they are likely to be the most resilient, but they're also the most strategic and the most creative. And we've seen all sorts of examples ranging from, sort of like straightforward heart and turns, flipping to sell, and also the valuation creation in terms of rental yields, etc. But it's some of the more interesting business models that we've seen over the years that I think that's really, really brought bridging, into the mainstream, if you like, within the specialist markets, because it's such a strategic tool. And I think any investor that's looking to sort of build or create value, I think it's an essential financial instrument that they should be using to realise that.
Have you got any sort of specific examples, Emma, of sort of cases where buy-to-let landlords are using bridging finance?
So I think the one that kind of piqued my interest most recently, it's kind of a bit of a bread and butter type approach, but again, it's the nuances of the client profile. So we're working with a customer at the moment, and they're really passionate about sort of the green agenda. And so their business sort of model is that they go through a program of regeneration. So it's kind of refurbishment, but with the lens to regeneration. Yeah. And essentially what they're looking to do is to create affordable rental homes for families that may need some kind of financial assistance or support, through various sort of benefits. And what I kind of like about that model is that one, from a lending perspective, it's great because it's short term and then into term. So we kind of support them on each of those journeys. But they're creating great, good quality housing stock that's, contributing to the sort of demand in housing, the lack of quality housing that we have. And it's that commitment really from them. And it's just that kind of slightly different lens that they've taken with the regeneration and the green agenda. And so I find that really, really interesting.
I think the green agenda is going to be a hot topic next year. And I think you'll see more and more lenders looking at that. I think there should be incentives for the greener landlord, I think, and lenders offering them something special. I think that there's a market there. Are you seeing similar, Alex?
Yeah, exactly. Very similar to what Emma said. And touching on the refurb again, we see quite a lot of people or investors buying property and converting into HMOs, and good quality HMOs. These are people that understand the HMO market, know what a good HMO looks like. And that's a fantastic model. It really does help with the yields. And we see it time and time again.
Yeah, and what we're seeing as well, because the government, didn't they announced some changes to the permitted development rules, especially around sort of vacant commercial property. So could you probably just, for our viewers and landlords, just explain what opportunities that provides them and how they would go about financing it? Emma, are you seeing those sort of inquiries?
Yeah, we are actually. And I think the key thing about the sort of changes to the permitted development is essentially, again, touching on that theme of regeneration, it's there to try and kind of revive sort of high streets and bring new life into sort of vacant, sort of abandoned property types that would lend themselves very well to an alternative sort of housing. So it is a great opportunity actually for investors. I mean, you need to be, I guess, you need to know what you're getting yourself into. It's like with any of these things, you think great. And so before people go racing off into the sunset with a clutch of abandoned high street properties, they kind of need to just make sure that they've got their strategy straight. But what this does actually really support is, the developer quasi-investor that wants sort of certainty that if they're going to sort of take the time to invest and convert a commercial into residential, they basically aren't going to have to face the bureaucracy they would normally face with the full planning requirements. So it's trying to make it easier. It's trying to sort of stimulate that sort of marketplace again, and again, create essentially new dwellings. And I think what's particularly interesting about that sort of commercial space is that we've seen a great deal of office space already under the existing PD convert, but this just now opens that up further. So it's kind of created even more opportunities for investors to, create value and provide, essential housing that we need.
I bet your development finance guys, Alex, I bet they're busy with PD projects.
Yeah, absolutely. I mean, I think just echoing what Emma said, I think we've all seen that the PD, we've got experience of the standard PD schemes, which is your industrial kind of units where they've had office space converted into resi. But what this scheme does is it allows, for more maybe the high street locations rather than those in industrial estates, they're seeing a lot of, obviously there's going into the roof space now, which is obviously an option. This also covers the retailers we've touched on, and also I think agricultural as well. Yes, there's some great opportunity. What I would say, a bit of caution, is we're not seeing much in the retail space. Now, one of the main reasons for this is, traditionally retail is, it can be quite deep and quite narrow, and actually it's more than just the PD. You've got the natural light that you have to be able to achieve, and it's very difficult in a lot of retail to actually get that if you think that they're very, like I say, narrow and deep, and actually you can't get the natural light in there. So we haven't seen too much of that. We have done one recently, actually, which was under this new PD rights, which was a bookies converting it into some lovely flats. But that was on a corner, so they could easily get that natural light in there. So I think there is going to be quite a lot of issues with the retail side. Most of what we're seeing is actually going into roof space. So now, they've got a block of flats and actually they want to go into the roof. We're seeing some of them being done successfully. Again, it sounds a lot easier than it is. When you're going into a roof space, a lot of the time you've got shared utilities probably in there. There's probably freeholder, leaseholder consents that needed. So yes, there's opportunity, but it's just a little bit of caution of, really understand what it is you're getting into before you kind of push on. But that's where, working with a specialist lender really comes in, because you've got the people that would say, these are the issues that you could come up against, making sure that they've ticked all the right boxes. But yeah, there is definitely opportunity with it.
Yeah, as always, do your research. Yeah, because we've got that double story extensions now permissions as well, haven't we? Which is, again, getting the phone ringing. So that's good. I suppose what also getting the phone ringing is the landlords going back to term finance and looking at other opportunities more in the sort of semi-commercial and the commercial space on the investment side. Now, clearly with the pandemic, it's had an effect on a lot of sectors, certainly on the commercial side. So I guess from a lender's point of view, appetite's a little bit mixed with regard to semi-commercial and commercial. Emma, where is Shawbrook on the commercial side of things?
Yeah, I mean, it's a really interesting market at the minute, and it's equally as challenging for reasons that we've touched upon. It depends on the type. It depends on if you've got a retail, that's a very challenged space at the minute. It depends on the strength of the tenant and the covenant. So there's a lot more to consider when you're looking at sort of a semi-commercial or commercial. I think from a lending perspective, and we've actually sort of remained consistently sort of busy, but I think, it doesn't necessarily make it any easier. But I think what investors need to be mindful of is alternative use, sustainability of income, and they need to have a bit of a sort of short, medium, long-term strategy. And I think if they can sort of align all of that, in the right way, then they're very likely to get a lender that will support them on that journey. Because if a lender's concerned by some of these things, then as an investor, you should be too. But if you can kind of tick those boxes, if you like, not to oversimplify it, then you will find lending partners there for you. And to have that as part of a diverse sort of portfolio will reap dividends in the long term. Without sort of straying into advice, you have to be very careful. And I would certainly urge everyone to seek advice from reputable brokers like yourself. They can be very, very valuable assets to have on a portfolio, but you need to be very clear on your strategy and how you go about it.
Yeah, well, that is sound advice, Emma. And Alex, I think you're not currently in the full commercial space, but you're certainly active in the semi-commercial. Talk to me a bit about that.
Yeah, so we have a semi-commercial offering, and it does keep us very busy. We're still seeing a lot of it, but as Emma said there, you need to make sure that you fully understand that commercial element. And the tricky part is at the moment is what is a good commercial tenant, and I don't think anyone's really got the answer for that at the moment. If I look back at we're seeing some semi-commercial landlords that 12 months ago we'd have said, wow, that's a top-notch deal with a strong commercial tenant in there, but now they can't let it because the previous tenant's gone and they can't let it. So what is a good commercial? We're seeing some big names demanding some ridiculous rent reviews, and as a commercial tenant sometimes what do you do? The commercial tenant is as the commercial landlord. The commercial tenant is the one with all the power at the moment. So it is a difficult market, but if you've got underwriters that understand it and can really get into the nitty-gritty of that commercial, really understand the underlying, the fundamentals of the business, how they've traded through this period, what they're, you can do some projections. There is still opportunity there, but sometimes it may be that you just don't take the commercial element into account when you're assessing the ICR coverage. You'll just take the residential. It's that bespoke underwriting on those deals that is massively important, and it ensures that not just the lender, but the investor isn't getting into something that's going to get him tied up in knots, basically.
I think that advice around alternative use as well, Emma. I mean, I think that's a key thing, and that's certainly what we look at when we're talking to investors is, okay, well, if it does go wrong, what else can it be used for? And therefore, it's slightly lower risk for you guys. So, Anything else to add, Britt? Come back on that, Emma.
Well, I think the point around having expert underwriters is key. And I think sort of Alex was quite right to say that you need that experience in order to be able to get under the skin of really a deal and to know the markets and to understand the nuances between the difference between, the question, what is a good tenant? And we're seeing some other assets, interestingly, probably come into sort of more favour, if you like. As we all know, the challenges in retail and leisure, but then you look at something like a warehouse or a distribution centre or a storage facility, that could also then lend itself to an alternative use. You're probably going to, be more comfortable there. But that comes with experience, that comes with underwriters that sort of understand and have probably been through a couple of sort of cycles, depending on how old you are, to see sort of how the commercial assets in particular behave in a recession and a downturn. And that's certainly something that stuck with me from previous years gone by. So,
but we've all been through at least one recession, haven't we?
Yeah, exactly. Yeah.
I'm conscious of time. Just wanted to talk. Obviously, the uptick in business caused largely by the stamp duty holiday. So before we wrap up, it would just be good to get your views on how you see the market post March, really. Crystal ball time, Alex. How's it going to be next year?
Well, yeah, I mean, between now and next year, I think we've got a lot of water to go under that bridge, haven't we? We got Brexit deal, the vaccine, but let's try and crystal ball to April. I think the world is going to be in a euphoric mood come April. I really do. I think, the vaccine's then rolled out. Let's park how we're going to pay for the last 12 months support at the moment, but let's just park that bit. I think they're going to be, we're all going to be in a great mood. And I think when we're happy, we will spend money. So I'm pretty confident that, the economy is going to bounce back, and it will bounce back quite quickly. Obviously, that's only just my gut, but stamp duty, again, hunch, I think something will be done with it. I don't know what, but I think it will. It's a well-tested method of being able to kind of inject some positivity out there. So what it is, I don't know, but I think there will be. And I actually think that the market, because what we're seeing now, and it's not just lockdown, there's been pent-up demand, I think, for over the last 3 years. I think with the uncertainty, the economic and political uncertainty of Brexit vote, I think it dampened the property market as a whole. So I think there has been pent-up demand for some time. And I think we'll still see that trickle through into next year, even with or without the stamp duty being there.
Yeah. Thank you for that. I like an optimist.
Yeah, I'm always an optimist. I like to be, definitely.
Emma, are you optimistic?
Always. Definitely glass half full. I think that the markets that we're in, and I reference the investor profile that we work with, they were active pre-COVID, pre-stamp. They will continue to remain active, and they will continue to look for opportunities where they can create value. So in terms of whether they extend the stamp duty, I mean, I'd like them to, because I think, there will be some hangover of properties that will miss the deadline. And I just think, that could, that's not great, for the investor or the economy. I think we need to try and stimulate it to keep going. So if I was Chancellor for the day, I absolutely would keep stamp duty going for some time. But I don't think it's a sort of showstopper or a deal breaker. I think motivated investors will continue. And if anything, if there are some stalled purchases, that might create opportunities. And, some of our investors will be best placed to capitalize on that. So that's kind of the sort of my view of how I believe investors will respond March, after March next year. So, yeah, positive. And I think it's a lender's job. I think it's our job to continue to find ways to support our investors through that time, through that transition. We should already be thinking about the fact that if the stamp duty comes to an end in March, we've got pressures on service to get deals done in time, and that's beyond the control of some lenders with regards to valuations and lawyers, etc. So we need to be thinking about sort of the consequence to that and how we're going to help our investors transition through that if they fall foul of the deadline. So we've got a part to play. We have a part to play.
Definitely. And I'm glad you're optimistic. And I think, you're right. I think we're in danger of talking ourselves into a worse position than we are actually in, I think. And so, it is going to be fun leading up to the end of March with everybody screaming for cases to be completed. And I think everybody's going to need each lender's support and each broker's support and everybody working together to get them over the line. On extending the deadline, I'm in two minds. I think they should probably relax it and say maybe contracts have to be exchanged by end of March and then sort of spread the deadline out a little bit that way. I think extending the deadline too far may cause an even bigger bubble. I think you're right. I'm talking to a lot of landlords who are waiting for it to end so they can start looking at opportunities and pick up bargains because they see that it's going to happen. So interesting times. Alex, anything to add on that before we wrap up?
No, I don't think so. I think one thing, we both mentioned it, myself and Emma, is that whatever 2021 throws at us, the property investor always weathers the storm. And you never underestimate the resilience of the property investor. So, whatever's thrown at them, they always manage to deal with it. And we as lenders, like Emma said, we need to do our part there. And, the specialist lenders are there to support the investors, and we will be all through 2021. There's no doubt about it.
That's good to hear. Lovely. Well, sadly, Emma, Alex, we're out of time today. So thank you very much for giving up your time. I wish you both well in getting through to the rest of this year, to Christmas. I see the Christmas tree's already up, which is great. And good luck planning for whatever next year looks like. But thank you again for today.
Thank you, Steve.
See you both soon.
All right. Thanks, Steve.
Steve, thank you so much. And also to Emma and Alex, that was absolutely fascinating stuff. Really great to hear about the more commercial end of the market and what's going on at the moment. So thank you for joining us there. So up next, I'm going to be talking to Geoff Hall about which optional landlord insurances are actually worth having. And also, I'm hoping to find out a bit more about how the pandemic, COVID-19 pandemic, has impacted people's abilities to claim on insurances. Now, Geoff has a career spanning over 40 years in insurance and joined Berkeley Alexander in 1989. His experience covers a broad range of IT, sales, marketing and administration gained from within the insurance industry. Now, Geoff, who is ACII qualified, is a regular writer and commentator in the financial press. So we're delighted that he could join us here today.
Okay, so Geoff, thank you very much for joining us today. Really appreciate you taking some time out of what I'm sure is a very busy day to come and chat with us about insurance. Now, the first question I wanted to ask you is that obviously we all know about buildings insurance and contents insurance, but which optional insurance policies would you recommend that landlords could take out?
Okay, so there are two types of optional extras, one being attached to the main buildings policy and then a standalone separate policy. So within the main buildings policy, obviously you can have accidental damage cover if you choose to have it. Some policies will allow you to optionally add malicious damage by tenants. Some policies will automatically include it, some just don't do it. And some policies will have a legal expenses extension, either automatically included or as an option. As far as standalone policies are concerned, the main types of products that landlords will consider are a legal expenses and rent protection style policy, and a home emergency style policy will pay for immediate tradesmen to come out to fix an urgent issue such as a leaky pipe or a damaged boiler.
Okay, so there's things that people can do to kind of give them a broader coverage in terms of the property itself. I mean, I suppose just listening to that, and I don't know, I'm probably not alone in thinking this, but I'm always somehow sceptical around some of these policies and how, if I have a leaky pipe and it's going to cost, £300 to fix, how realistic is it I'm actually going to be able to claim on that policy? I mean, are these quite quick to pay out, these types of things?
So my view on all of these optionals is about perceiving the value in it for the individual. And every landlord will have a different view as to whether one type of policy or one type of cover is providing them with value. And my personal experience, I'm lucky enough to have 6 buy-to-lets myself. My personal experience is that if you have a good property managing agent, a letting agent, then you don't necessarily need the home emergency cover, because the tenant will phone the lettings agency 24/7, report an issue with the boiler, report a leaky pipe, and they will automatically get their local tradesman out to fix it. So if you have a good managing agent that's looking after the property for you, you probably don't need the home emergency cover. Legal expenses wise, again, if you've got a good managing agent that's going to look after any rent defaults and the process in evicting a tenant, again, you probably don't need the rent guarantee aspect of the policy. Because bear in mind, a legal expenses rent guarantee is paying the rent that's been defaulted by the tenant after the deposit has been taken into account.
I see.
But a good managing agent will deal with that process for you fairly swiftly. So it's down to the individual landlord as to whether they perceive a risk and therefore a reward in buying a policy that's going to cover either of those things. I personally don't have legal expenses rent guarantee or home emergency on my buy-to-lets because I've got a very good managing agent who looks after that area for me. But I can see why some landlords would see value in that. As far as malicious damage by tenants, accidental damage, that's not so much relating to the managing agent, and many more landlords would perceive having those sorts of covers in place, because obviously they can't predict whether the tenant is going to accidentally damage the property or indeed cause malicious damage.
I see. Okay, thank you. And in terms of COVID, obviously remaining very topical, how has it affected landlord insurances? So are landlords still getting paid, for example, for rental voids at the moment while COVID's going on?
Okay, so COVID really hasn't had a major impact on the buy-to-let insurance market. We are seeing premiums steadily increase because the current market is what we refer to as a hard market. So underwriters are generally pushing rates up, are a little bit more circumspect on the types of risk they're insuring because claims experience is increasing. And therefore, they're being more careful about what they insure and how much they charge for it. So we are steadily seeing prices increase. But as far as the actual rent section of a policy, bear in mind a buildings insurance will cover the loss of rent following physical damage to the property. So if there's a fire at the property, and as a result of that, the tenant can't live there for 6 months, the policy will pay the rent for that 6-month period until the property becomes habitable again. Insurance buildings policies don't generally cover rental voids as a result of a tenant defaulting on a rent or there simply being no tenant in place. That's when a legal expenses rent guarantee policy would kick in if the tenant goes into a default situation. But as far as the main buildings policy is concerned, it wouldn't pay a landlord for rent that the tenant hasn't paid because the tenant has stopped working but is still living in the property. So we haven't really seen a major impact on the rental insurance market as a result of COVID.
So with the rental guarantee, just to stay on that point for a moment, so if someone has a tenant who is unable to pay the rent because they've been impacted by COVID and it's affected their income, would the policies have, in theory, paid out for that to date?
Possibly. The thing to bear in mind with the legal expenses rent guarantee is the rent guarantee part of that policy is there to refund the landlord if the tenant has gone into default and is going through the eviction process. Right. So there was a period back in April where rent guarantee insurance for new clients wasn't available. Insurers stopped selling it because obviously evictions were banned through the courts. Those policies have now become available again, so people can now start buying them again. But all of the existing policies would still be providing the level of cover. So to receive the rent payment from the legal expenses insurer, you have to have started the process of the eviction. And of course, the first process is to give the tenant the appropriate notice, and then you're going through some form of mediation process before you actually get to court to do the eviction process. And of course, the court's eviction process is being delayed at the moment. But the insurance policies would be paying out the loss of rent as a result of default as long as that process has started. The other thing to bear in mind with legal expenses rent guarantee is you have to be using the insurer's solicitor to go through that process.
Right.
You can't have the policy, do it yourself, or have your managing agent do it, or have your own solicitor do it, and then 3 months along the line turn around to your insurer and say, right, I've now evicted them. They owed me 3 months rent. Can I have 3 months rent, please? You have to have used the insurer's process all the way through. So those processes for clients who already had the loss of the legal expenses rent guarantee, they will have been going on through this period, and they would have been paying out the claims, but on the process that the tenant was actually being evicted or was agreeing to move out. These policies would not be paying out simply to say, I'll give the tenant a 3-month payment holiday and then they can stay in my house when they start working again. That's not what the policy is designed to do.
Fair enough. Okay, that's great. Thank you for clarifying that. Now, I know that one of the things that you are able to offer is portfolio insurance, and lots of the people watching this video will be portfolio landlords like your good self. And I've never actually heard of this insurance, so I'd love if you could just explain to us a bit more about how it works and what the benefits are of taking this over a standalone policy.
Absolutely. So you have two options. You can either insure each property individually under its own policy, or you can put them all under the one policy. And I'm a great believer in, if you can put them under the one policy, it's better value. You will generally get better cover. You will generally get a lower premium by putting them all under the one policy. It's also a lot easier. You have one policy, one renewal date, one premium payment, one claims line. Generally speaking, you'll have the same cover across all the properties in one go. So it's much easier to manage, and you will generally get a better deal. Also, if you've got one property that stands out a little bit, is unoccupied, is an unusual construction, perhaps you've got 6 or 7 properties which are professional lets, but you have one student or one HMO or one commercial or semi-commercial property, then a portfolio insurance can normally cover them all under the one policy, as opposed to having to have more than one. Because the insurer will view it to say, look, if you've got one high-risk property, they may not want to take that on its own. But if you've got 6 standard homes that are on a residential buy-to-let basis, because it balances the portfolio out, they're much more likely to write it, and they're much more likely to write it at a premium that is cheaper than insuring them all separately.
It sounds good. I can't. What's the downside? I'm trying to pick out the catch.
There isn't a downside. This is the beauty about arranging a portfolio policy is that there is no downside, because if you do find that one of the properties under the portfolio is causing you a problem on the insurance. So if, for instance, you've got a commercial premises that is unoccupied and the insurer is charging, in your view, too high a premium for it, you can take that one property off and insure it separately if you can find a cheaper premium. But generally speaking, you won't, because you'll get a better deal by having it all under the one policy. Because bear in mind, premiums aren't just being charged to cover the property, they're being charged to cover the administration of running the policies.
Right.
The more policies you have, the more administration you have, therefore the costs are higher. By having one policy, you've got one administration process, and therefore it generally brings the price down. And
I'm just thinking about all the clients that we have who have multiple properties. And sometimes we have people who will own properties personally and some in a limited company. Can you portfolio insure those even though the ownerships are different?
It depends on the ownership. So as long as the ultimate owner is the same, yes, it's possible.
Okay.
But what we can also do is we can still arrange 2 separate policies, one for the individual and separately for the company, but look at them as a package together. So we can present the risk together to the insurer to say we have 6 properties under this policy, 5 under this. The 6 property portfolio is in the name of the individual, the 5 property portfolio is in the name of the company, but they are the same. We may need to arrange 2 separate policies because of the ultimate owner regarding insurable interest, who actually owns those properties. But we can deal with them together, so the insurer can look at them as a package and therefore rate them as an 11 property portfolio as opposed to a 6 and a 5.
That's good, thank you. And my last question for you is, so when I go to take out insurance and I look through the various, excesses, and does it cover legal cover and all the rest of it? And, invariably I just choose the cheapest one, which probably isn't necessarily the right thing to do. So I suppose when landlords are looking at buying insurance, what particular conditions should they be aware of and looking out for when they're making their selection?
Okay, so it depends on the level that someone wants to look into the policy. Most buildings policies will cover, in the main, the same sort of things: fire, flood, storm. Most residential policies will also cover subsidence automatically. Some commercial style policies may only cover subsidence if you extend the policy. So checking to make sure subsidence is included is important, but it normally would only be an issue if you're talking about a commercial property where it may not be automatically included. You might have to ask for it as an extension. Excesses obviously are important. Bear in mind you have a varying excess depending on the claim. So your claim for a fire excess might be lower than a escape of water excess, might be different to a subsidence excess. So bear in mind that there'll be multiple excesses depending on the type of claim. Those 2 are keys. In respect to rent protection, as I've already touched upon, you need to go through the claims process to get them to do the eviction process for you to be able to qualify for it. As far as other things to be aware of, it's down to the individual preferences. It's down to having that peace of mind as to look at the options and make your own decision about how much you're prepared to pay for the level of cover that you're looking for. So some people will be very price sensitive, looking simply for the cheapest policy, irrespective of the cover. Some might want a full-blown all bells and whistles policy and be prepared to pay more for it. There is a fine dividing line between the levels. So, for instance, on the loss of rent for a rent following a fire, some landlords will want to pay only for 12 months cover. Some will want 24 or 36 months cover. It depends on the individual circumstances as to where they see the value for money in that policy. And my view is our job is to give them the options so that they can then make an informed decision as to what they want to buy and at what level of premium they want.
Perfect. Thank you so much for joining me today. I really appreciate it. And I'm sure that people watching this are going to be, feel a little bit more enlightened about insurance options. So Geoff, thank you so much, and hopefully we'll see you again soon.
Absolute pleasure. Thank you.
So next up, I'm speaking to Peter Littlewood, who is CEO of iHowz Landlord Association, and Elizabeth Fisher, who's a barrister and property law expert. And what I'm hoping to cover off with these guys today is to talk about the current regulations around repossessions and how the landlord as a community as a whole has been dealing with the challenges of this year. Now, Peter has been involved in lettings since the early 80s, when he started off letting one single room in his house to make ends meet. In the 30 plus years since he's owned and managed buy-to-let property, he has been running a letting agency and also been involved in landlord association community for over 20 years. Now, Peter is a trainer for the London Landlords Accreditation Scheme and iHowz Accreditation Scheme, that of which he is the CEO. So Peter's experience of not just being a landlord firsthand, but also the landlord community and his closeness to other landlords is really second to none. Now, Elizabeth Fisher is a barrister and member of the Planning, Property and Environment team at 33 Bedford Row. Her practice consists mainly of general, civil, property and landlord and tenant work. Now, Elizabeth is regularly instructed on a wide range of matters, including land law, planning appeals, landlord and tenant disputes, and contested housing matters. Elizabeth also has a strong chancery practice and has represented both claimants and defendants in contractual disputes, debt recovery claims and enforcement. Now, before coming to bar, Elizabeth also worked as a commercial estate agent in Kent, where she assisted in the negotiation of high-value joint venture property development projects, landlord and tenant disputes, Housing Act notices and property licensing. So I'm really, really pleased that both of these guys have had time to come and join us today to talk about some matters which are clearly going to be very, very close to our landlord community's heart.
Okay, so look, Peter, it's really nice for you to be in the hot seat rather than me for a change. And the first question I really wanted to ask you, keeping in mind your really broad access to the landlord community at the moment, is, how are they doing? What are you seeing with regards to rental voids? And what are landlords actually doing to manage their portfolios during this really difficult time?
Well, as I'm sure we're going to talk with Elizabeth later on, a lot of people misunderstand the current situation. They're saying, if we get a rental void, we can't do anything about it. Well, they can. There's a lot they can do about it. We'll discuss that in a minute. But what we're tending to find is that there's been an awful lot of legislation coming at landlords over the last couple of years, really. And then a couple of days ago, it was suggested, no more than a suggestion, that capital gains tax might get doubled, which is, obviously not clever. So, I think an awful lot of landlords, particularly those who have either been in it a very long time and were possibly planning to start, letting go now or in the next few years, are letting go early. A lot of the accidental landlords or the people who don't really know what they're doing, anecdotally are starting to sell up. We did a survey of members about 2 or 3 months ago about capital gains tax. How many of you are buying? How many of you are selling? And there were quite a few definitely thinking of selling in the next year or two. But there were some of the larger landlords who were just looking to buy. So we expect that the number of rental properties will broadly remain the same, but there will be less landlords, but the landlords that are there will be hopefully more professional and know what they're doing, which will end up giving less work to Elizabeth. But that's another matter, isn't it? So, anecdotally, we're finding that it's not so much voids, it's the opposite problem. People staying in a property, not paying rent, believing they're absolutely bulletproof, and not moving on.
And you seeing much of that? Is that really kind of, happening?
Yeah. Oh, yeah. Elizabeth, are you seeing a lot of that as well? So.
Well, in relation to tenants staying, when they stay, I guess we get involved on the advice stage. So what options people have. And I know that we're going to plan to come on to that shortly. But I'm not really at the forefront of everything. So I'm not dealing with tenants on a daily basis. I normally get involved when people want advice, but I'm aware that is the approach. And I'm also aware that at the moment, landlords are quite cautious about the agreements that they enter into because rents have just plummeted. So I've heard on the grapevine that it's a renter's market at the moment, and it's more about a renter being able to negotiate, particularly in central London, in areas such as the city, where people they're not needed in the city, so they've been moving out, and then it's just caused rents to plummet.
Yeah. And Peter, do you think, based on all of this, that your landlord's investment plans are starting to change? Are they sort of rethinking what they're going to be doing over the next few years? I know we've touched on capital gains, but more, and selling things, but more in terms of where they're investing, the types of property they're going to be investing into?
Again, as I say, I think it's starting to come round to the market is now generally becoming more professional, which quite frankly I applaud, because it has been too easy to become a landlord, and bearing in mind they're dealing with people's homes. Yeah, it's only right that they should know what they're doing. So we've been a big advocate, for instance, of all landlords should be trained and accredited, and it's not a legal requirement. The larger landlords in general know what they're doing. You get some who get a bit stuck and believe that because they did that 5 years ago, they can still do it. And again, I'm sure Elizabeth gets this a lot with landlords who have been doing it for 30 years. And I've always done it. I mean, I had a training course about 3 years ago. And there was a gentleman on there being a landlord for about 30 years. And everything he was doing was wrong. And some of it was unlawful. So I had a hell of a job persuading him that, he shouldn't continue like that. So, yes, I believe that it is changing, that we're going to get more what I would call portfolio landlords. I know that tends to be an institution, but what I mean by that is people who are now concentrating on perhaps a dozen or more properties and attempting to do it properly rather than the odd one or two. And I know that surveys have been done in the past tend to find up to now the bulk of landlords have only got one or two properties.
So you think that the smaller landlords, well, we call them dinner party landlords. I don't know if that's kind of. Yeah. So we think maybe the dinner party landlords will kind of subside, but the larger portfolio landlords are going to carry on going because this is their business, and this is what they need to do, and they'll just sort of almost, I guess, make hay as the smaller landlord kind of steps away.
Yes, I believe so. I mean, you may have been seeing this with mortgage applications, I would have thought, and especially with some landlords deciding to also go incorporated and either incorporate what they've got or anything new they've got, incorporate that. So you, I presume, are starting to see more mortgages for limited companies rather than individuals now. Are you seeing that?
Yeah, definitely. I mean, I think the pendulum swung massively in terms of purchase business. The incorporation thing, there's a really mixed bag on that, actually. There are landlords who are going through that process, but there's also people who, having sort of taken into account the cost of doing so, particularly for those with sort of maybe just 2 or 3 properties, they've come to the conclusion that actually it isn't necessarily worth doing. I think there's also some nervousness as well around longer term, how the tax situation may change again against limited company ownership under the sort of envelope tax situation. So, I think people are concerned that they could kind of make a large decision, cost themselves quite a large amount of money, and then end up actually no better or even worse off in the future. So there's nervousness there for sure. And so, Elizabeth, I think it would be really great to just help us understand what actually the current situation is around repossessions, if you don't mind.
No, of course. The new regulations came into force, and those regulations, it's quite a mouthful, is the Public Health Coronavirus Protection from Eviction and Taking Control of Goods England Regulations 2020. So I won't be saying that again, I'll just refer to them as the regulations. But essentially, they prohibit the execution of warrants and writs of possession or the delivery of notices of eviction until the 11th of January 2021. There are some limited exceptions to those, and that includes claims for trespass, antisocial behaviour, nuisance, death of a former tenant, and false statements which could be induced into granting a tenancy. And I think Peter's going to talk to you later about due diligence and sort of steps to undertake. Is that something that iHowz are quite they're sort of advocating for with their landlords? But there is a further exception which landlords will be pleased to hear, and it's probably most relevant to them, and that's in relation to evictions permitted to proceed if possession orders were granted on the basis of substantial rent arrears. So that would be based on either grounds 8, 10 or 11 within the relevant housing acts where they respectively apply. So the definition, though, for substantial rent arrears, where I'm sure most people won't be happy to hear, is that this has slightly changed. And now this requires at least 9 months worth of rent arrears to be outstanding at the date in which the possession order was made. And additionally, those arrears must have accrued before the 23rd of March 2020. So that was just before we went into the first national lockdown. And then to make matters worse, there is also another regulation which currently prevents any bailiffs from entering dwelling houses in order to take control of goods. So should any landlord be seeking, they have a money judgment that they wanted to utilise to take control of goods. I know it's slightly different to repossessions, but there is also a prohibition, that's also prohibited under the new regulations too.
Gosh, okay. So doesn't sound
so a lot's happened in the last few days, but essentially there is scope to take possession for rent arrears, but you need quite a lot. You need 3/4 of a year, which is quite a lot by anybody's standards. And it doesn't really seem to take into consideration the fact that landlords also have their own mortgages to pay, they have their own expenditure, they have requirements that they have to adhere to, such as gas safeties, and often rent would be utilised for that. And if that pot's not getting topped up, there's no consideration as to how landlords are supposed to fulfil their duties.
Right. Okay.
I think it's worth noting as well that there's a potential judicial review against that outstanding at the moment, which is David Smith is masterminding, just basically, especially the bailiff stay, where saying that if a bailiff order has been raised, and then that person staying there, or sorry, the tenant staying there, not paying rent, it's just unfair. They shouldn't be evicted. So that's going to be interesting, because I think the reasoning given by the Secretary of State, and I'd be interested in your comments on this, Elizabeth, is that it's unsafe for a bailiff to go into a house, in particular Tier 3, so it's done originally for Tier 3, and also during the lockdown, because it sort of goes against other government rules. So we wait to see. I'm not entirely convinced that one will succeed. What do you think, Elizabeth? Stick your head on the line. So.
I think that judicial review stemmed at the time when the letter came from the Lord Chief Justice that sent the letter. But the regulation seems to have superseded that, because now there's a specific regulation, although it deals only with taking control of goods, but there is a specific ban. So it'll be interesting to see how that judicial review is going to play out. I think the difficulty we've got, and it's something that I actually experienced yesterday at court, in that the defendant didn't attend because they sent an email to say that they've just taken a test, they received their results this morning, and they've tested positive for coronavirus. So the interests of justice obviously mean that we can't proceed in their absence. This is the second time the matter's already come to court. And speaking with my instructing solicitor, she said she's had other debtors. This was a debt recovery matter. But she's had other debtors where they continually say they're either experiencing symptoms, or they've had to test, they've had a message to say that they've come into contact with someone, so they have to isolate. And so it's just causing further and further delays. So I guess the other interesting thing to see once this ban will be lifted is what happens if the person you're trying to evict has to self-isolate. Because surely the bailiffs then can't go in, and also you can't move somebody who should be self-isolating to move them out of their home to go where they'll have to go to the local authority and be housed there in temporary accommodation, and that's obviously not feasible either. So I think there are a lot of issues and problems which haven't been considered, and there's just simply no answer to just yet, which I know is very unhelpful.
But this goes back to what Elizabeth said earlier on, which is due diligence at the outset, and also be aware of what landlords can do. We've got a draft fact sheet which will actually be ready we send out a weekly email to our members on Tuesday. So I'm proposing next Tuesday, I don't know what the date is, 24th apparently, to be ready for that. But it's very much about do your due diligence at the outset, get an application form filled in. So as Elizabeth has alluded to there, if a tenant lies on their application form, that is a reason to evict. And, and also keep an eye on the property. Again, this comes back to what we were saying about being a professional landlord. And, your dinner party landlords who just sort of think, oh, it's easy, just put someone in there, and then I can turn to Elizabeth to sort it out. No, you can't. You need to be keeping an eye on it, because courts will take a dim view of someone that makes no effort to manage the property properly. Can't say that. And then just expect the courts to sort it out. It's just not good enough. They need to do it properly.
It's all about
is that too strong?
Have things covered at the front end, so that when it comes to a point, if you do need to take it to court, that actually there is no kind of stone left unturned, no doors that are left open against you.
And if they get an arrears, they should still be chasing those arrears. Okay, it may be extremely difficult to go to court for a very long time, but there's nothing stopping the arrears being chased. And indeed, like with any service, if I engage Elizabeth and I don't pay her bill, she's going to do a money claim online against me because she's given me services I've not paid for. Exactly the same for a landlord. Yeah. They're giving services. they're not being paid for it, they can do a money claim online. And I think that the tenant then needs to be aware that there's a potential county court judgment. But I'll get off my soapbox in a minute. But the landlord really must be prepared to negotiate with the tenant to find out their circumstances, because they can't just ignore it. And for a tenant to turn around and say, I've got no money, is unlikely. Most people have got some income somewhere, maybe reduced, but not many of them will have absolutely zero unless you're a landlord.
So I suppose, really, if we've got our landlord, their tenants have stopped paying their rent, they're not having any communication with the landlord, or simply saying, I just can't pay you. Practically, what's the next steps for them? What should they do next? What are they meant to do? How's best to tackle that?
I think
go on, sorry, Elizabeth. Go on.
Thank you. So I think that the first step is to try and make contact with the tenant. You need to speak with them, and you need to ascertain as much information as possible. Because regardless of whether you're issuing new proceedings for possession or you're looking to restart proceedings which had previously been subject to the stay, the court now has an extra step, and they want to know the circumstances of the tenants. So you should be making contact with them to find out if they've been made unemployed, if they're furloughed, if they were self-employed, but their trade has been restricted as a result of any of the restrictions. I think you'd also need to take into consideration, if we end up going back into a tier system, how that plays into it and whether that's had an effect. And then once you've ascertained all of that information, you should be able to work out whether they're in receipt of some money, and then you can try and come up with a proposal or an agreement between you that should at least mean that you can either service your mortgage and a little bit extra, or just that you're recouping some rent and you're not getting into a black hole of rent arrears, which eventually you'll probably never get back. Because obviously that's something that landlords always struggled with when they ended up having to seek possession on the grounds of rent arrears. It was how they would reclaim money and their rent arrears once the tenants moved out. Often they'd be subject to small amounts monthly to be paid to them. And if this is only going to grow larger and larger, and you're looking at 9 months worth of arrears, that will take forever to get back. So you want to try and avoid getting to that position. And if you find out that your tenant has been furloughed, then a consideration could be given to if you'd be willing to accept a percentage of the rent, so equivalent to the furlough, and that then the remainder will be due once they're back in work fully. And I know that Peter has some suggestions set out, because I had the benefit of reading his letter yesterday. Would you like to set those out, Peter, seeing as they're your brainchildren?
Well, basically all we're saying is I can make this available. So if people want to email Jenny, then I can make it available. It's normally available for members, but we don't mind showing them. But we got a set of letters that we suggested are sent. So I'm reading from a different screen, so excuse me looking away. What we say is the first sign of arrears, when they are 1 month in arrears, advise the tenant in writing they're in arrears, and they need to discuss it with you. And there's a pro forma letter. After a further 2 weeks, now 6 weeks in arrears, write the first formal letter, which is a letter for action. And in there, you're telling them that they, do they want to go to arbitration? That they really should be discussing it. Don't just ignore it. If they got problems with COVID, then say it. After a further 2 weeks, now 8 weeks or 2 months arrears, write the second formal letter. After another 2 weeks, now 10 weeks in arrears, serve a Section 8. People are saying, I can't serve one. I've got to wait for the 6 months, 9, all sorts of figures. No, you can still serve it. Serve the Section 8 and advise the tenant you served it. And then finally, we say, at all stages, try to negotiate. We've got an income expenditure form that may help. And there's a rent repayment schedule as well. So it's important for everybody, and especially if it ends up in court, that everybody tries to sort the situation out beforehand. And again, we're trying to say to landlords, if you don't get all of your rent, well, surely 80% of something is better than 100% of nothing. So, be prepared to negotiate. Just because you've got a contract for X pounds doesn't mean to say you got X pounds. And again, we go on to say, You could postpone part of the rent for a rent holiday. Well, we've got the likes of Shelter saying the landlord can take a mortgage holiday. Well, it's a holiday. It's got to be paid back at some stage. You could waive some or all of the rent for a while, or you could set a new rent level or do a combination of the above. So, there's a whole load of things that landlords should be doing, not just going, oh, no, it's all gone wrong. But don't worry, Elizabeth will sort it out.
Elizabeth to the rescue. I think one question I really wanted to ask is, when you're, say my tenant wasn't paying their rent and we got in touch, we made contact and we made an agreement that they would defer so much of it. How should we document that? I mean, surely an email between them and I is not sufficient. I mean, do we need proper contracts, or how would you suggest people approach this?
So I was going to add into what Peter was saying, that whatever method you choose, make sure it's clear and make sure that both parties understand. So if you are agreeing a new rent level, and then that will be the rent level moving forward, but it doesn't apply to the months that have already been missed, set that out and make sure it's clear. And I would suggest that an email is sufficient, as long as you send an email saying that this is what we've agreed, and you ask them to reply by email. And if they don't reply by, because that can then sort of stand as their confirmation, or if you refer to the fact that they've already agreed it, and if you say, if I don't hear from you again, then I take it, please confirm that this is correct, or if I don't hear from you, I understand that this is correct. Email exchanges, it would be sufficient, because in circumstances where you can't necessarily go and see your tenant and have a new contract signed, and also you have an existing contract between you. So this is just a variation of the terms, and it could be a variation for a set period, so 3 to 6 months, or it could be a variation for the duration of the contract. And I think the most important thing is, if it's done orally, make sure it's then codified in writing, because memory lapses, people interpret things differently. And if you're in a situation where you're going to court and fighting about what exactly was agreed, and you're both putting forward, I said this, they said this, it's going to be a matter for the judge to make a decision. Whereas if it's clear in writing, that will obviously benefit you. Peter's made reference to ensuring that you get it right, so that you don't have to then, and I'm thinking, oh, Elizabeth will fix it. But actually, there are certain errors which I just can't fix, no matter how much I try, because there are procedural defects which the court just won't allow. And as Peter's already alluded to, this is somebody's home. So the court are very strong on ensuring that the rules are complied with. So it's very important to ensure that all of the procedure, whether that's at the very start of the tenancy or when you're coming to issue proceedings, that you follow it correctly. So that even if that means taking advice early on, sometimes spending that money and seeking advice straight away can just ensure that you don't issue proceedings. Your proceedings are then thrown out, and then you may have to pay the cost of the tenant, and then you have to restart again. So it's spending money to save money in the long run. And of course, I have to do a shameless plug for direct access barristers, because that can be a way of saving money. You don't necessarily have to go through a solicitor. You can contact a direct access barrister like myself or other members of my chambers, and just explain the situation and say that you'd like a bit of advice as to what would be the best way to proceed. And they could advise you as to the procedure and the steps that you need to take to make sure that you adhere to the correct procedure for the court.
Perfect. So look, it sounds like if people are having some trouble, there's lots of support available from them in the form of landlord associations, barristers and other things. So I think that's really great advice for the people watching this. And I'm conscious of time, so I'm going to thank you both so much for joining us. I know this is an area which is of concern to so many people, so I really appreciate you coming to us today and having a chat. Thanks.
Thank you for having us.
And now it's time for us to move on to the final part of today's MFB Live, where I'm going to be running through some of the questions that you have kindly emailed in advance of today. Now, there were quite a lot of questions. I'm not sure I'm going to be able to cover them all off within the time that we have, but I will try and get to as many as I can. So first of all, I've been asked about rolling over current funding mortgages to renew the term of the loan. So I think this is really in regards to people's ability to extend the term of their current mortgage once it's reaching the end of the term. And so this is very well, it's relatively straightforward to do. Obviously, there's kind of a caveat around your own personal circumstances, a type of property. But essentially, if your mortgage term is coming to an end, so you've reached the end of the 10 or 25 years or whatever it might be, you would look to take out a new mortgage by way of a remortgage with a longer term attached to it. Now, what we tend to find is for those people whose mortgages are coming to the end of a term of 25 years, generally speaking, they tend to be at the higher end of the age ranges. So normally it's people who are particularly in their 70s and even early 80s. So if that is the situation and you find yourself where you're looking at a mortgage term ending, first of all, you need to consider remortgaging. Now, if the age thing is something which actually applies to you, don't be disheartened. Lenders' approach to lending to people who are in their older years has moved on fairly significantly over the last maybe 5 years, I think. So actually there are lenders who will take people at age 75, 80, and actually some lenders don't really have a limit on the maximum age on application. So do give us a call if that applies to you. I'm sure there will be options. Like I say, there's lots of things that go into eligibility for mortgages, not just ages, but actually, you know, it should be a relatively straightforward process. So give us a call. We'd be delighted to help you with that one. Now, I've also been asked that the gentleman is looking for easier ways to raise money to develop properties. Now, I think it's fair to say that when we talk about developing properties, we're covering off a fairly broad range of possible kind of scenarios. So it could be that you literally want to buy a property, do a quick, what we would call in the trade, which isn't a very nice expression, tart and turn. So essentially decorate, new kitchen, new bathrooms, possibly new windows, it might need some rewiring, but all relatively cosmetic work. It could be that you're looking to buy a property and start reconfiguring the internals, and it could be that you're looking to do an extension or go into the loft or something like this. And it could be that actually you're planning on knocking something down and rebuilding it. So each of these types of development projects come with a different type of range of possible solutions for financing them, which tend to start at bridging finance and work their way up to full-on development finance. Now, I think this would be far too complicated to go in today because it would just take forever. So I think probably the best advice for this gentleman is actually, if you're looking to get into development or continue with the development projects, again, sorry, but just to give us a call and we can chat through your individual requirements and also the kind of projects you have available. And we can then really advise you on ways to finance that appropriately. Another question we've had is that someone has mentioned that my broker tells me that most lenders are actively moving away from lending to corporations, especially those which own HMOs. I would like to know where the experts see this trend going post-COVID, and also advice on future acquisitions for buy-to-lets. I disagree, actually, that lenders are moving away from lending to limited companies which own HMOs. I think at the start of COVID, there was a nervousness around lending to people who had HMOs, particularly those which were let to students. And the reason for this was that, first of all, in the student market, no one really quite knew what was going to happen with the students coming back to university. Were these student properties come the autumn term going to be left empty? Which hasn't happened, by the way. Actually, these properties got filled really, really quickly and easily. And actually, students were desperate to get, out to universities and I guess away from their parents. And I'm sure their parents were as keen to see the back of them as well. So that really applies to the student lets. For the more kind of professional type tenants, again, I think there was some nervousness about people sharing when they were meant to be kind of isolating and how that would impact things. But actually, it's kind of all calmed down now. So yes, at the start of lockdown in spring this year, some lenders did come away from that market, but everyone has come back to it now, and actually the market is looking very, very comfortable. So I think that information you have there is possibly outdated or wrong, I'm afraid. Now, in terms of future trends going forwards into a life after COVID, if we can dare to dream of such a thing, I don't think the lenders are going to do anything crazy with regards to culling criteria. And actually, I suspect that we will start to see things lift again going forwards. The lenders are still keen to lend money. Obviously, they have to manage their risk based on the data that they're seeing, are going to curb or improve their lending criteria to manage this. But fundamentally, lenders are looking to lend money just the same as they were pre-COVID. There was a constricting of criteria in the same way that HMOs, lenders became mildly nervous of those for a period of time across the market. But again, that has really gone away. The only thing that I think we're still seeing a lack of is high loan to value products. And that's going to be really linked to a potential nervousness around house prices moving into spring 2021. Talking about house prices, our view is very much that house prices will come down a little bit in the spring, probably up to around 5%. But when you start reading the kind of predictions around the economy and the housing market going forward, people are expecting this to be a relatively short drop, with things kind of going back in an upwards trajectory coming into the end of summer and autumn 2021. I think it's also worth saying, actually, that house prices have gone up and up and up over the last few months. So when we're talking about a 5% reduction, we're talking about a 5% reduction on a price that is inflated, not a pre-COVID price. So I hope that helps. Another question I have been asked is anybody lending to pure commercial properties these days? Yes, they are. Obviously, there's going to be some nervousness around the tenants and the ability to have rent coming in to service the mortgage. So I think lenders are going to be very sector specific sensitive at the moment. Obviously, if you have a commercial property, which is, for example, let to a doctor's, that's going to be seen as a good covenant, something that's let to a business which has also potentially been through some difficulties through COVID, or indeed there is an expectation that sector will really tail off post-COVID, would be slightly more difficult. But to answer your question in short, yes, there are options. Please do give us a call and we'll be very happy to chat through those with you. The way we work at Mortgages for Business, for those of you who aren't familiar with us as a business, is that we have consultants who specialise in certain sectors or areas of the market. So we have brokers who specialise in buy-to-let, those who specialise in homeowner mortgages, and those who really focus on the commercial end of the market, because that in itself is a fairly different sector. And so, the good news is when you do call us up, you're always going to get through to someone who really knows the area that you're interested in. The next question I have is, I purchased several properties 4 years ago. I'm thinking about selling them just in case property prices dip and I end up in negative equity with them. Also, as a portfolio landlord, the loan to value on these will impact the rest of my portfolio when I go to remortgage. Your advice is much appreciated. Okay, so when you're a portfolio landlord, what lenders tend to want is that your overall loan to value on the whole of the portfolio sits below a certain level. And that level is varied depending on which lender we're approaching. So some lenders say, for landlords with more than 10 properties, we want the background portfolio to be geared at no more than 65% loan to value, as an example, but this does vary. I think really in response to this question, yes, it would be a pity if negative equity properties dragged the portfolio down. But generally speaking, if you do have a portfolio which is geared much higher across the board, as long as the whole thing is in negative equity, there are generally lenders who are able to take a more flexible approach. I think lenders don't just focus on the loan to value of the property. Some lenders are also much more focused on the rental income that you're receiving. So if you had a portfolio of HMOs which were geared at 80% loan to value, but the rental income that you're receiving was 250% of the mortgage interest, we have lenders who would certainly consider that. So it is a kind of more tailored approach. So I think, again, for this person, probably the best advice is to give us a call. What we're very happy to do at Mortgages for Business is take someone's portfolio, comb through it, come up with suggestions about how you might be able to improve things, what possible challenges you would face when applying for mortgages, and that may then help you to make a sort of more informed decision about whether selling properties is the right thing to do. Okay, so lastly, I have had a couple of questions which are very much linked to tax, so inheritance tax planning, capital gains, putting properties in trust, that kind of thing. I really would dearly love to answer those questions, but I'm just not qualified to do so. And so first of all, I'm not allowed to answer them. And secondly, if I did attempt to, I'd probably give you some really bad advice. So if you do have things which are related to structuring companies, capital gains tax planning, all that kind of stuff. Unfortunately, it's not one for us. You really do need to have that conversation with a tax advisor. And that is everything today for us for MFB Live. So I hope you've enjoyed your time watching us. I really do hope you found it useful. I know we've covered quite a broad range of topics today. I've thoroughly enjoyed chatting with people and also listening to Steve's panel debate earlier on, so I hope you found it good too. Mortgages for Business would love to hear from you if you do have any questions. Our phone number 0345 345 6788. Like I said, when you do call, you do get the option to choose what type of inquiry you have, and then you'll get put through someone who's a specialist in that area. So we're delighted to hear from you. Likewise, if you haven't had a look at our website before, please do go and have a look. There is so much information on there: case studies, mortgage calculators, repayment calculators, stamp duty calculators, blogs, you name it. It's got full of information that's really, really useful. And this site is www.mortgagesforbusiness.co.uk. So once again, thank you so much for joining us, and we look forward to seeing you at our next MFB Live. Take care of yourselves.